If we talk about this notion, first of all, that rising rates are going to be a headwind for real estate, residential and commercial alike, why is it that we are seeing so much construction activity right now? It seems as though many parts of the country have cranes everywhere with construction projects going.
Well, the question my clients ask me almost every day is, do I put the shovel in the ground today, or do I wait a year from now when we might see lower inflation? The bottom line is that it's better to put the shovel in the ground today because, yes, inflation is higher than it's been in years, but that's with respect to goods and labor. But the cost of capital is still relatively low. If you look at the short end of the yield curve, most of our clients, 2/3 of our clients are getting short rate debt. And those that go long, even the 10-year is still relatively low. So I would say to you that demand is there. There's shortages of housing, shortages of industrial, and the cost of capital is lower today than it will be a year from now. All those factors come together, makes sense to put the shovel in the ground today.
Let's talk about whether or not that leads to bubble-like activity. I mean, there are arguments to be made, Spencer, that there are many parts of the real estate market that are already in a so-called bubble phase right now, that there's a growth rate that cannot be sustainable. Do you feel as though that's the case right now, given all of the boom in the construction market that we've been seeing?
I don't see that for two reasons. First of all, one of the great things about the commercial real estate industry is it's somewhat self-regulating with respect to the type of construction you're seeing. Most of the construction you're seeing is in industrial and in multifamily, where we do have shortages based upon demand. Office, where we don't have a shortage based on demand, you're not seeing much office construction. You're not seeing much retail construction. And those are the areas that have weaker demand than the areas I mentioned before. So no, I'm not worried about a bubble. As a matter of fact, if you take a look at last year, we saw unbelievable rent growth in multifamily and in industrial, the areas where we're seeing the most construction, in some cases in excess of 20%. Now, will that rent growth continue? Certainly not at that level, but we still expect advanced rent growth in 2022 and beyond.
How much of a threat, really, Spencer, is rising rates? If you look at this right now, the market's pricing in what was 4, now what could be 5 interest rate hikes on that short end that you talked about. This notion here that you could have longer term debt as well, maybe rising along that side of things. Is it a situation where the real estate market, especially commercial, should be a little bit more cautious going forward, given the fact that we are seeing rising rates?
Long term, rising interest rates, modestly rising inflation has actually been good for commercial real estate, both for rents and for property values. But the only time I would really be concerned here is if we're wrong on these 3, 4, 5 rate hikes, and it's much worse than that. If it gets much worse than that, then you should be concerned. But if it stays in that band, it's a very favorable environment for commercial real estate, because by any historic measure, even if the 10-year Treasury goes up by 100 basis points, which is about where it will go next year sometime, maybe in the mid-2s, that's still incredibly low cost of capital by any measure. So if inflation goes beyond what we're saying, there may be some cause for concern, but in this 3 to 5 rate hike band, it's a very favorable environment.